Good afternoon, or good evening, or good morning, everyone out there in NPC Markets fanboy land. Jonathan Takadena here, and Kai Chen, bringing you this week's episode of Bulls versus Bears. Now, our vaunted leader, Mark Gardner, he's on his yacht at the moment, even though it's not great weather here in Sydney. It's like 23 degrees outside. But yeah, it's obviously yacht weather for Mark. And welcome, Kai.
Hey guys, good to be back.
Yeah, great, great. And was episode 106, Tsunami of Software Selling. So I think it's called SaaSmageddon or Apocalypse. But basically, the main headline this week is that AI is eating software. But yeah, we'll chat about that fairly soon there.
I couldn't even spell it looking at it today. I'm like, I was trying to Google it and you couldn't find anything, so I had to ask AI, how does it work?
Yeah, but we'll chat about that now. Well, let's go. What's the next slide? Basically, I think we can chat about. Okay, yeah, so equity market. So just to recap, I think it was Goldilocks and the Three Bears last week. We were all bearish a week ago, and then there was this massive rally on the Friday night. Look, if you picked it, fantastic. Look, it kind of popped out of nowhere for us. And then over the weekend, I forget the name of the prime minister, but Japan's first prime minister called an early election and actually won convincingly. And so the main driver behind that is she is a student of Abenomics and wants to print, or yield curve control, whatever it needs to get done to stimulate the economy she's willing to do. And that's why the Nikkei shows there, like it actually had a great week this week. It slid off a little bit into the close. ASX 200 XJO actually hit a new intraday high yesterday, just over the 9100 level, and it's back a little bit, but generally we're at near highs. But kind of mixed in Europe and mixed in the US markets, and you'll see there the Nasdaq's actually down for the week. And so while we were all bearish, if you look on the Thursday close to Thursday close, the market was actually up a tiny bit. So doesn't matter though. We were all on the bearish side, and so there was no change in the lead there. So what do you think about the equity markets this week, Kai?
Yeah, it's very interesting. I think obviously Japan, the outlier out there at the moment. Takane, is that her name?
Man,
Takane.
yeah, my wife's Japanese, and I haven't kept up to date with her. I know the general gist of what she represents. That's about all that I can.
She's fairly conservative.
I've got a. Okay, So
she's a conservative leader, and basically, you're right, and she is definitely a student of Abenomics, and I think obviously that's why we're seeing a bit of a disconnect in the Japanese markets, with potentially some more QE coming from Japan, right?
Yeah, so yeah, interesting as well. The yen's actually strengthened this week, and the yuan as well. So it just means that in my just quick observation, I think China and Japan are doing quite well. The Nikkei, sorry, the Kospi index is at record highs. The Singapore index looks fantastic. Like they're all near highs. So looks like Asia is the place to be if you're looking for growth. And that's been kind of the consensus anyway. Like obviously led by China. It is going to be the center for growth, because the main thing is we've got good demographics in a few of the emerging countries in Asia. Japan, China, not so much, but they do have established industrial bases, and they're highly productive societies there. So yeah, I'm a big bull of Asia. I'm actually looking at some of these ETFs and how we can actually access that. Just on that though, because we are even though we are tied to America at the hip, we are in Asia geographically, and obviously we sell a lot of commodities and food to that area as well. So yeah, I think Australia will just ride that wave along. Yeah.
Mm.
So interesting. I mean, like, what are your thoughts on the equity markets? I mean, like, it's just for me,
Yeah,
it's been really, really volatile. And the thing is, it's sector by sector.
correct.
Obviously, we haven't actually had a chat about earnings this week. Is there any highlights for you?
Oh, massively. I mean, it's really well, like the reason why we're seeing that performance on the ASX is mostly because of the banks, right? So, I mean that performance by CBA, ANZ, Westpac, like they are all very very positive for the Aussie banks, right? So, although we've seen a bit of a carnage in Aussie tech, overall the index is still up because I mean CBA's, one of the largest company on the ASX, right?
No, I
So,
think I think
ooh,
BHP's. Oh,
slightly.
like, actually, that's a good question because, like, I know that they kept swapping places. So
Hmm.
I think with that jump, maybe CBA's taken the number one spot again. But I'll have to double check that. But either way,
Hmm.
it's a much of a muchness. One of the so Mark did mention this to me is that even though the RBA raised rates, and one of the highlights is that the amount of mortgages that was taken out, and this is why the banks are making so much money. The amount of mortgages that Australians have taken out has actually eclipsed Ireland after because Ireland was like the tax haven within the EU, and their economy just pumped on that. So after that, they were they piled long and strong into their property market, and there was some sort of record where everyone just went long Island property over there because they were doing so well. Australia just eclipsed that record this year. So
Oh,
yeah, exactly. So I'm not too sure. It could be slightly different because we haven't had a pullback here in property in Australia. But interesting that everyone is long Australian property, and the banks. If you look at that's kind of like the widowmaker trade. When everyone looks at Australian property from overseas, saying that is nuts. One of the proxies for the trade to express that view is to short the Aussie backs, and that's always been a widowmaker. So
mm,
because at the end of the day, uh, even though like it's CBA is a great bank, but does it deserve to be the most expensive bank
mm,
in the world?
mm,
Not I can't argue with that, but that's what the market has priced in. So
mm.
yeah, so great. If you're a bank holder, been a really good week for you. So
Yeah,
well done to you. So this is the US market map. So any highlights for you there? I mean, like
yeah,
one of the things I would like to highlight, and Mark mentioned this when he was on the call on Thursday, and discussed it that Amazon.
yeah.
Amazon has been beaten down, and get this, they're selling Amazon to get into Walmart. So they're selling Amazon because it's software and it's online, it's risky, but it has a low PE, but they're moving it into Walmart. So it just shows the disconnect that's in the market at the moment. I think it just if you believe in fundamentals, good luck to you because a lot of this makes no sense from a fundamental perspective. So that's why I was telling you guys, like, I think we just have to stick to technicals and sentiment to guide us through this because if you look at the old, if you were from from the stockbroking era where and you were transported into today's markets, you'll get chopped up basically.
Mhm.
And then that bouncing Friday was led by Nvidia as well. So yeah, big
It's
recovery.
it's quite surprising that disparity between, like, say, for example, the chip makers and then the SaaS companies. Like, I mean that's the whole SaaS
SaaS, SaaS apocalypse.
apocalypse. Yes. So, I don't know. Like, I mean, we were listening to TV today, and we're basically like, we're hearing Claude and Luke talking about it on Ausbiz, right? Like, and I think Claude's got a fair point, and this is kind of my view as well, where I just think it's absolutely ridiculous. Like, Look, I mean, look, I think there's probably like, these companies where it's like micro SaaS, or where, you know, these things that do one task. Those kind of apps, like, it is so easy to replicate nowadays. Me being at the driving seat on, basically AI at here, right? Like, I'm not saying I'm a bad developer or anything like that, but I'm pretty good at Python, but my GUI, or graphical interface design, isn't that great. But like, you can get away with so much with these AI tools. So I get the point there, but I think what the market's missing, or like they're retrofitting, is like, you're going, okay, well, anyone could go out there and build zero today, and it's like, yes, but you're missing the point. Like, Zero has how many users, but the whole value is in their data, right? Because if you really think about it, these language models are incredibly smart. Like, you look at Claude, you look at Grok, any of these models, they are very good generalists, and you basically have the encyclopedia on demand, right? But the issue is, like, for example, if you ask AI a medical question, or or even something more obscure, like, tell me how to build a fighter jet, right? And it's
Hmm.
like, it will give you incredibly rubbish responses, because it's only got what they've scraped off the internet. So,
But it'll say
yeah,
it'll say it confidently,
yes,
and it'll make itself believable as well. So
correct.
yeah.
It's very convincing. I think I really think where the frontier is, it's like, there's three things. You got private data. So, for example, like the blueprints to these engineering questions, or proprietary, IP and patents and all this stuff. And then also the user base. I think the market's massively discounted. Like, yeah, sure, you can go build zero today. You could probably build it in like a week if you had like 5 people, right? But that's not the point. The point is, they've got so many subscribers. You've got marketing, all the all the business side of it, and the momentum and subscriber base that they have. I just don't see where the argument comes from. Like, I do see, like, it makes the barrier a lot lower. Like, you can have three kids in a garage these days, and they could build an app, right?
Hmm.
But does it make the app less valuable? I'd probably say no.
Yeah, and don't forget, like, these companies have. I mean, like, yeah, sure, you can get a similar product software wise, but the distribution, the actual, like, relationships that you have to build to get into
Mm,
enterprises and actually get actual revenue,
mm.
that's a whole different ball game as well. Like, yeah, sure, you can build great software and it has a pretty face, but yeah, the actual heavy lifting of getting these programs to be adopted and used by corporates, which is where the money is. Yeah,
Mm.
like, I guess the market's just totally discounting all of that. So, as an example, like, we have the Salesforce building here in Sydney. Like, we can see it from our nice view of the harbour. It's like they didn't get there by accident. Like, to be able to sponsor that building, hire whatever office space they have in that building, and have a global footprint. Yeah, that takes years and years to build. And yeah, even though AI can come in and build another CRM,
Mm.
you have to talk to all the IT managers within all those companies to say, oh, you know, why use them when you can just use us? And it's like, oh, hang on, we've got all our data there. It's all secured. They've got a help desk, whatever it is. But yeah, so and we've discussed this here, is that this is actually an opportunity.
Mm.
The fact that these companies have come from, call it hundreds of PE, anything over triple digits. Some of them are back down to half of what they were, or even less. Um, so yeah, there's definitely an opportunity here. I think Mark is actually publishing it. We're gonna have to, and I hate to use the word, but on Ausbiz, the word of the day is nibble. There's been a lot of everyone saying, yeah, let's have a nibble at these prices. Let's have a start dollar cost averaging at these levels, because you might not get the absolute bottom, but if this is one of those unwarranted sell-offs, you want to have your toe in the toe in the water with at least a starting position, and then see how it goes from here. So as an example, Claude, he's a long-term shareholder of Pro Medicus, and he was on the call today, and I was like, oh, I need to listen to this because he's an actual shareholder, and when he started talking about the level at it's at, and he talked about the moat and the fact that AI is actually productive or will actually make their company better. Is like, why are they getting rubbish and thrown into this whole SaaSpocalypse basket when AI can actually help them out? So I'm not saying that Pro Medicus is a buy today. But just he was just saying, and as I quote, have a nibble at these prices. And we've had a look at like Xero, WiseTech, some fabulous companies, RIA. Even like car sales, and then we can even start looking at some of the ones in the States that have been absolutely hit in this whole SaaSpocalypse drama, and see that there's an opportunity there. Oh, and I think we'll go on to this. Is that and we talked about so as traders, I don't know if you guys watch it, but Mark loves a show called Billions, and we were talking about, this whole SaaSpocalypse. What if there's a hedge fund out there that's actually, like, say, pre-prompted one of the LLMs, and then another LLM just copies that train of thought, and then they copy their own homework, and then suddenly there's a narrative formed, and we're like, why couldn't that be done? Someone with the resources to actually build out a few websites and actually, create fake news or fake data that gets scraped by these LLMs. Why couldn't that happen? So it just feels a little bit sus that, very conveniently that they're moving from industry to industry within, these software sort of niches, and it'll be interesting to see where it continues. But as I said, I think it presents an opportunity. We might have to have a nibble and dollar cost average going forward. But, if you had said that, would you buy Pro Medicus at 200 when it's at 380? Like, I think it got up to 500, wasn't it? I forget the actual high there.
It was like 380 or it was like, decent.
Yeah, I forget the exact number. I'll bring it up in the chart to do it. But now those software companies have been beaten down. This is actually the area that you want to start buying some of these quality names, because, as we've discussed, they have large moats. I'm sure they could be disrupted, but the disruptor will have to be extremely good, and then obviously they then have to build the infrastructure as well. Like, they'll have to go do cap raises and the likes, and and it's
AI doing the cap raise, eh?
Exactly. Well, I'm sure it'll draw up the pitch deck, and even maybe have some bots that sends out the spam emails and texts and things like that. But as I said, like, I think it does present an opportunity, and we will be looking to that in the future. So here we have the Aussie markets. This is the market map. You can just see. The two largest sectors that we have, I often joke here in Australia, what do? We flip houses and dig stuff out of the ground. Obviously, the banks is a representation of the housing sector and the finance sector. Done extremely well this week on the back of CBA's results. ANZ kicked it out of the park. Westpac actually did well, but it got sold off today. And then Rio was a standout in the mining space. So the Rio and Glencore merger that they were talking about, that I think it reached a point where they had to make a call, and basically that merger is off now, and the fact that Rio isn't merging with Glencore saw it move out to new highs. And it's not a specific buy right now, but I am a little bit, I wouldn't say concerned, but the price action on South 32 is surprising to me. So South 32, I believe, is the fourth largest. I mean, like, if you take out Newmont, So you got BHP, Rio, FMG, and then South 32's fourth largest, in that material space. If you read through the actual earnings that they released this week, absolutely, if you're within the commodity space, that is the news that you want to hear. In short, a lot of their revenue comes from copper, and it's actually their highest margin business as well. And obviously, that hasn't factored in the most recent move in copper as well. So, it's pulled back today, and I'm tempted to actually just start buying some for clients fairly soon, because this pullback makes no sense to me. And with BHP Rio at highs, I think it plays catch up and gets back to those highs. So, not an official rec there. Like, it's just we're just having a general discussion, right, Kai?
Yes. I'd watch list.
Absolutely. Anything you want to add to the ASX discussion?
Oh no, I think you summed it up pretty well. I mean, like it's just boom or bust, right? Like this earnings season, I can't believe how aggressive it either gets sold off or bought up. Like, if it's anywhere amiss, it's, oh my god, where we have to dump this stock to the ground, right? But like some of the moves in the banks as well, like just mind blowing, like 10% on CBA, like.
Yeah,
I mean,
exactly.
it reported well, but Jesus, like that's
and the ones that
move.
miss, like, usually, you'd be like, wow, 30%, and I think we've had multiple 30% down moves in a lot of stocks this week on the earnings. So yeah, it just shows, man. Like the and I'll say this to in jest, the casino's busy at the moment. It is in full swing. There's a lot of retail pushing these markets around. There's a lot of instos, a lot of algos pushing this market around. It is super volatile, and well, it just means there's opportunity as well. So just as long as you know how to control your emotions and do your homework, and not copy AI homework, there will be opportunities to make some good money here. So yeah, absolutely. What's the next slide there, Kai? Want
Let's
to
have a
move
look.
on?
Yeah.
Oh, commodities. So wow, look at that. So the blue bar, I believe, is the 1 day, and it's the 5 day is the big one. So yeah, silver's actually up. I mean, I don't think that takes into account the maybe last night's move.
Yeah, because yeah.
But either way, yeah, just in general, I am super happy with how gold is holding up. So before silver made that massive move all the way to 120, I was Team Gold. I was the self-proclaimed, and I often said this in jest when I was on Ausbiz. I was like, I'm the self-proclaimed gold bug. But the thing is, I would always just go on there and talk about a few small miners that no one else talks about. So I'm not too sure if people followed me. But yeah, just generally, gold has held in, and it's still trading around that 5,000 level, even though it is, I think, 10% from the high. So it did hit 5,600, but it's still around that 5,000. And if you had told me, say, back in November, like, would you be happy with gold at 49.50 or where it is exactly? I'd be like, yeah, absolutely. That's a great move. But the fact that it's had such a volatile swing up, and then there was that 1 day where silver fell down 30%. It just shows that the casino's in full swing, and especially it doesn't matter what market it is. Even a market like silver and gold have been pushed around by these algos and just this heavy volatility trading. So yeah, just very busy times. And the other one that I would like to say, yeah, uranium started to look good as well, but yeah, obviously it did have a fallback in the last few days. But yeah, that's commodities in general. And here we go.
Yeah.
Maybe you can have a go at why does AI hallucinate, Kai?
The AI echo chamber, eh? No, yeah, like I mean, I think for everyone who's kind of used AI, this is a pretty common occurrence, where basically, like, I think the problem with AI in its current state is its reliability, right? Because imagine you asked it the same prompt twice, and sometimes you're going to get different answers, right? And like it might be close, but really there's room for error, right? So like these things, I don't know how much we want to go into the technical details of how these models work, but it's kind of like the human brain, right? It's like it's a neural network. So basically, you got all these layers that they learn and optimize and stuff, but still, it's not an algorithm where, like, for example, if you do math, like, you know 1 + 1 = 1, right? There's a formula, and in coding it's like the same. It's like, if I put this in, I will get this output. The AI outputs are not consistent.
Hmm.
So it leaves a lot of room for hallucination, which just mean like the AI gets lost in itself, right? Or it misunderstands. And I think, for anyone who's used it, it's like the general rule is basically like the more context that you give it, the better the answer that you're going to get from it, right? So if you ask it a very general question like, AI, teach me how do you make money? And it's going to give you absolute rubbish, right? But if you give it very clear instructions on a specific task, it's actually very good. But I think what this loop is talking about is like, imagine this magnified 10 times. So with the amount of AI content that's available at the moment and online, you know, there might be 80% truth in this article and 20% very convincing lies. The next bot picks it up, and then it gives it 80% of accurate interpretations and 20% not so accurate, and it goes on and on for a couple steps, and in the end, you just come out with gibberish, right? So I think this is what it's talking about, where it's like, okay, well, how much can we trust AI generated content? Is it grounded in facts? And I think, as this technology matures, and as the users get more used to it, like all of us are using AI in some way now, right? I think this is going to be a big focus and question where we go, okay, any content created by AI is going to be convincing, but does it have any grounding in truth, or does it have any grounding in reality? And I think, the more as we go on in the next couple of years, this is going to be a big thing. People are waking up and going, okay, look, AI is very good, very smart, but do we trust it? It's going to be the
Hmm.
trust piece that's going to be the big focus for the next couple of years. And, I think it will improve over time. And I think the regulatory side is so underdone at the moment. For all the AI doomers, it's kind of the old Terminator predicament. And it's kind of true, right? Like, if you listen to Elon, he sits up at night thinking, will we become extinct because of AI? And he's not wrong, like it's obviously a very low probability, but yeah, it's interesting thing to consider. And what I do think we are lacking now is the regulatory bodies, basically the handrails that prevents AI from becoming a negative impact on society. Whether it's benign, where it's not like the Terminator scenario. I think the Terminator scenario is like very, 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 very small chance. But I do think there's like a big spectrum of benign scenarios where it's like, imagine the disinformation, or like even Grok being complained about, showing inappropriate pictures, and the old Google one where they're putting black people with Nazi uniforms, and stupid things like this. But yeah, like I think as we go along, that can spiral out of control if no regulations are placed or quality checks are placed around it. The doomers will say it'll be too late by the time it happens, but I don't think it's the case. I think it's a gradually evolving thing. There'll be mistakes that are made, and then there will be corrective action against that, right? So,
Yeah, and as we alluded to, or I chatted about in the beginning, like I was actually having a chat with guards, and we said it feels like someone's pointing AI in a certain direction as well when it comes to narratives. So,
mm,
as an example, like these SaaS companies have just been beaten down. What if you actually just feed a lot of SaaSpocalypse articles out there? AI goes out there looking at it, and it's like, oh, this looks like a credible website. I'll put this, and then another AI reads its homework, and then that thing spreads, and that's why it just seems like, as we call it, it's an echo chamber. And can you trust that echo chamber? Are you experienced enough to actually know if that's actually valid or not? And I guess that's the or even valid enough, or has it been manipulated along the way so that you believe in that narrative, or that word propaganda, basically. So interesting times. So either way, it looks like the algos have control of the markets, and when they start pushing a narrative, like, we have to understand that maybe we get out of the way, and then if it starts moving the other direction, we jump on board. So with that, this is one of the ETFs that we're looking at. ATEC, look at that, wow. So ATEC's down 33%, Salesforce down 41%, and ServiceNow down 47%. So that's just an example of how this whole tech sector has been beaten down. I mean, like, ServiceNow halved, Salesforce down 41%. Like, good luck if you're getting paid in what do you call them, options. Like, I've got and I don't think my old mates listen to this podcast, but so I've got mates that came from some of those investment banks, and some of their bonuses were in options in the GFC, and we're talking six figures. Went to nothing, and I just went, oh, jeez. Don't you wish you could sell those straight away after the vesting period? But unfortunately, they couldn't. Either way, we think there's an opportunity to buy fairly soon. Maybe have a nibble at these levels. As been alluded, maybe have a nibble. Understand that if you do buy here, it could fall a little bit further, but you do have some more dry powder available. But if it does bounce from here, at least you've got a little bit of exposure, and you can see how you feel about the whole position emotionally, and ride it from there. So what's the next slide there, Kai?
Let's have a look. Sentiment score.
So just interesting. So the fear and greed index was 33 last week. So this time last week when we were doing the podcast, it was 33. So it's up a little bit. Obviously, interesting that even though we had that big bounce on the Friday and a bit of continuation follow through, we're still in the fear camp. So interesting. So Kai's in the lead.
Man, on fire.
So you're 4 out of 5. I think last week was the first one that you got wrong.
And then I called the pattern. I said they're going to buy it into the weekend, early in the week, and then come off later. Or like maybe I didn't get I'm not sure if I got the overall prediction right or not, whether it's up or down. But right, buy it up and sell it off into the weekend.
Well done. Well done in that regard. But unfortunately, if we ask the judges, we're just based on is it higher or lower? And unfortunately, it was higher. It wasn't by much. So for next week, Mark has submitted that he's actually bearish. So I'm on Mark's side. I still feel like this market's due for a bit of a pullback. But the problem is, I actually just started looking at the ETF inflows, and there's an actual chart of actual fund inflows, like they show you month by month, and it's a record January. So it just shows you month by month. This is actually the strongest January they've had ever in terms of ETF inflows. So with that amount of record funds going in, I don't know why I'm so bearish. I'm fighting the flows here, but it just feels like the bond market has signaled me something. I don't know. The old spy trader in me is coming out, or maybe I've just sat around Mark too much and started wearing his bear-proof suit. But either way, I'm bearish for next week. What and why are you bullish, Kai?
I just think basically there's going to be a bit of recovery, right? I mean, there's been that the SaaSpocalypse thing's been going for almost a week, and it's. Mate, there needs to be a pullback. Like, you can't keep shorting forever. There's people going to be taking profits. I think that the sentiment is so negative at the moment. Like, peak news is basically when you start hearing all the news agencies really talk about this, right? So it's like it's already out in the general public. It's at max fear. I think next week it stabilizes or has a little bounce back up.
All right, fair enough. Okay, well, we shall see you next week. So either way, thanks for listening, everybody. That is this week's episode of Bulls versus Bears. Everyone have a great weekend, and make sure you manage your risk because it is volatile out there.
All right, thank you guys for joining. Bye.